Hello everyone, I hope everyone's doing good. So I have a couple of things on the agenda. I need to go over previous week's outlook and connect that to the EOD, and then I'm gonna do current week outlook. And if anyone could comment and let me know if I should start doing a daily reviews series. So just basically going over every single day's price action, and I'll try not to miss any days, because hopefully then I can connect these days' price action. I'll get first of all, a better outlook on what price wants to do for the future, and it's good mental recaps for if any price action day was interesting. So let's knock over the first thing on the agenda, which is let's just do a brief overview on the outlook. If you want a more in-depth sort of look into the outlook, I posted another video. The title is just basically this: week of 7/15/2024 outlook. So let's go into this here. So the anchor high was my drawn liquidity, which was this high here at around 21,000. Don't know if we'll be reaching it today, but we'll be looking straight to it. The week of previous days, all low resistance, I'm sure we'll gravitate through it. So my first drawn liquidity was this week's high here. Or we could sweep the initial mitigation, giving us IMS. That would give us great framework. Or instead of reaching drawn liquidity, we could first drop down lower, perform a second stage manipulation into this price area here, and then head over to drawn liquidity and to the anchor high. But this is if we have an IMS into the mitigation, since it was not filled, and the quadrant 4 discount has not been filled yet, so this is possible. So this here couldn't have been as shallow as I anticipated it to be. I was basically saying it could have reached into this fair value gap here, which was in quadrant 4, if you divide this range into 4 quadrants. And then for this one, it was a little different. I had a update because the scenario that I didn't point out anywhere here was that maybe we take the first drawn liquidity and then head lower and then create a breaker framework, and then to a presumed D, which was above the B's high, which was the candle that took the previous wick's low resistance, and that will give us a breaker to then hopefully travel to anchor high. And this was on daily time frame. So I was just pointing out the lower time frame. Okay, so I want to go over the framework that I was anticipating in this chart here. So what it is that basically we move lower into a paid area at discount, and then we trade higher initially to induce early buyers and induce willing sellers at this low here. So if smart money wants to counter pair longs, it would have to take this low, accumulate its longs, and then we start to trade higher. And obviously, these are the price conditions. I noted into the notion notebook because it's obvious. But if these are inversed, then there will be something, probably another thing in mind for price to do. So let's move into the EOD. Okay, so there's a bit of writing here, and I'm going to take my time with this one because it's very important. Not only to you guys, but to me as well. So this is a great mental recap for me. So here. So what ended up happening is that we inversed the price conditions, and then we didn't reach for the high again. So counter pairing here failed. So all we had here, the induced sellers are now on profit, and the induced buyers are now taken out of the market, they're liquidated. So what happened is the same kind of framework. So basically, this is just in a bigger scale. So what happened is that we had this first run over here, which was the first manipulation, giving us A, and then they run higher, B, and then they run lower into the weekly fair value gap, and giving us C, and then hopefully a little insight to my outlook, D, hopefully. So if this weekly array holds, we're likely to continue higher. But I think I'm getting around here, and I should tone it down. I'm gonna just stick on the EOD for now, and then in the outlook I can get all the good stuff. So what I was anticipating is that we completely reject off of the levels that were below equilibrium and leave the anchor low untouched and have this move lower as just manipulation. So basically what I'm saying here is that we leave this anchor low and we have this anchor, we have this manipulation here stopping in between these arrays here and then the move higher. That's what I was anticipating. What ended up happening is that we actually violated the price conditions that supported bullish ideas and ended up moving lower and liquidating some relative equal lows as well as the anchor low. So as you can see here, these relative equal lows liquidated as well as the body close beneath. And let's implement some of the Dow here. So the first thing I want to show you guys is that here's the Nasdaq daily chart and here's the 12th of July, which was the beginning of the week. And here is the Dow, and here is 12th of July, which is the beginning of the week. What do you notice between these two charts? Well, I'll tell you what you can notice here. When you see the Dow going higher and the Nasdaq failing to move higher, what does that tell you? It means that there is more pressure on the Nasdaq to go higher because the Dow is able to rally. But the Nasdaq fails to, which means that when the Dow stops rallying, when the Dow stops rallying, the pressure that was placed on the Nasdaq to go higher is now gone, and it can move more freely. So that just means don't trade. But then the Dow started to agree with the Nasdaq and started moving lower, leading for more of a short bias or user move lower. However, this wasn't clear to me at the beginning because you can see the first 2 days were consolidations as well, but it's really sealed on the third day. So what I mean by this wasn't clear to me at the beginning, but because you can mistake the first 2 days for consolidation days. Because if you look here on 12th of July, it was kind of a consolidation day, and then 13, another up-close consolidation day. And if you look at the Nasdaq, you can kind of mistake them for both consolidation days. And the final one that confirmed that these were not consolidation days, but a cracking correlation, was the candle that represented the 15th of July. So you can see we had a big drop lower, and on the Dow, we have the big move higher. So what this actually hints at is that more investors are leaving the Nasdaq, which consists of high tech, high risk, high yield, return opportunity stocks, and moving over to more slow moving stocks within the YM or the Dow. These often include slower stocks, but more safe and lower yielding stocks, but a divergence within them can hint that investors are moving over to the Dow and leaving the Nasdaq, making the Nasdaq go lower, and then the Dow can start going higher. But then since Nasdaq is almost always the leading market, it's going to follow what the Nasdaq does. So as you can see here, recently what happened is the Dow started to move in correlation with the Nasdaq, so that gives us a relative standpoint between them. And you can see within today's price action, which is Monday of 22, you can see that price started to sink back in with the Nasdaq. That means moving higher would now be easier for the Nasdaq, and we will not have the anomaly of them being completely in different directions, which gave us the last week's price action, which was really difficult to deal with. And I think that was one of the main reasons why the outlook did not play as anticipated. So anyways, the price condition I updated is on the outlook of 715 has been violated and since reached for sell-side lower. So that's this part here is really important, and I'm gonna give this video another watch so I can fully ingest what I just said. So let's get into the outlook. Okay, so let's first begin with the screenshot here. So as you can see on the weekly time frame, the same liquidation that happened to the anchor low, which was this low here, and that was the anchor high. So we had the liquidation on our bodies, and then a stab back into the monthly open, giving us a second stage manipulation confirmation. So what happened here is that this first move higher here induces buyers, this move lower here traps the buyers, and then This move lower here also places willing sellers at this low. And then we have the early move higher, which induces buyers and introduces trendline liquidity on lower time frames. So if you were to look on a daily time frame within this weekly candle higher, it would have all been just trendline liquidity higher. And this here is also counted as a accumulation of orders. So the AMD pattern that you all see is not just, it's not always going to be looking like this: a high, low, high, low, high, low, and then a manipulation higher and then distribution lower. Sometimes what it looks like is just a high and then a low, and that would be your accumulation, manipulation, distribution. And here what's happening is that you can see that we are within a breaker foundation. So after this second stage manipulation or the liquidation of the bodies, reaching into consequent encroachment of the weekly fair value gap and getting a deeper stab into the monthly open, because I was not convinced that the monthly open manipulation is going to be just a small wick lower. So having that body close beneath the monthly open really gives us a viable kind of scenario for manipulation. So now that we have the monthly manipulation, we can now expect anything higher than this price to be distribution, anything lower will be manipulation. So let me read this. You can see off of last week's retrace into the imbalance that engineered loss of sell side at the low, so I figured we might have to dig back into that price range once more, getting also a deeper stab into the monthly open, which is our time-based equilibrium, as well as liquidation on the body lows. In theory, if this weekly imbalance works as intended, it's going to rebalance previous week's range, because leaving it would just be creating high resistance for price, and if algorithm is efficient, it will make it the least tasking it could by rebalancing previous week range, so it's not demanding much from price, and it's a reachable target that we reach the swing high to put in the new all-time highs. And now that the Dow was moving relatively by the Nasdaq, this will make it easier for Nasdaq to move higher. So I just want to add on to something that I said here, which is, so I was saying if algorithm is efficient, then it would make the move higher to this high here the least tasking it could. So it will make sense that if we want to deliver to this high, we would rebalance this price range here. So rebalancing this price range would confirm low resistance within this run here, that rebalance it, and then eventually a run higher. And the breaker foundation I was talking about is from here. So we have the low A, and then we have the high B, and then C, which was the second stage manipulation, which I like to see a lot. Let me actually draw this out so it makes more sense here. So as you can see, we have the first run higher, and then they run lower, and another run higher, and then another run lower. So this run higher here is named as the first stage manipulation. And then the second run here is then the second stage manipulation, of course, into a key level. So what actually happens within this run here is that you have your low of the breaker, the high of the breaker, the lower low of the breaker, and then anticipated the higher high of the breaker, which gives us this to be as a formulated breaker. So basically, if price is efficient, if the algorithm is efficient, then it would have to rebalance this price range here for then to make it easier on itself and not demand so much from its abilities to be able to deliver to a steep price point such as this high here. Or we could create a fair value gap here, and then that would just be more reassessment on lower time frames, and that would be demanding more from price to go on lower time frames and see how we would react within a fair value gap formed here. Into the next point, and now that was moving relatively by the Nasdaq, this will make it easier for the Nasdaq to move higher. So as I mentioned before, the Nasdaq and the YM are now moving in sync, so that will make it easier for the Nasdaq to drag wherever it wants the YM to move. And the daily Nasdaq time frame has the same story, but the 4 hours where you get some more narrative on whether the weekly inefficiency is going to hold or not. But what I mean by the clean efficiency is not the one that's going to be created here, hopefully not, but the one here, the lower one. So you can see that the mitigation of it is within this low here. So let me read some of the text first. So the price condition between the equal highs and lower prices is a range condition. It's totally viable that we respect the range condition and start moving lower to get deeper price action. Firstly, if it wants to fill the opening range gap, and secondly, if it wants to have another stab at the weekly open. because I don't know if I'm convinced that the small wick we have into it deems as efficient manipulation. What I mean by efficient manipulation is, does it actually fulfill its purpose of inducing sellers into the market? We'll be hinted at the question by if price wants to respect that for gap or not. So whether this small wick lower here is deemed as efficient manipulation will be answered whether if we respect this gap or not. Now I'll get into more detail within that, so do not worry. Otherwise, if we respect it, I'd like to see reaching to the equal highs, which are also the high of daily gap Nikkei instead high, that we need reassessment within. See if he wants to leave that weekly range unbalanced or dig higher and rebalance it. Okay, so let me simplify what I just said for you guys. So as you can see, we have the balancing of the previous week range if we hit this low here, and then the first drawn liquidity if this then that condition plays out, and that will be the first anticipated drawn liquidity. So let's get into it. So as you can see, today's opening range gap was pretty significant, but first let's not put all of our eggs in one basket, and let's move within this chart here step by step. So let's start off with the weekly open and then the week opening gap. So you can see the week opens within this gap, creates a couple of wicks lower, but does not seem to close below the open. So that's something that I want to keep my eyes on, and I want to see if price wants to reach lower and mitigate the weekly open before reaching higher, or eventually reaching lower and inversing the week opening gap. So the week opens. So the week opens, and then we have the So the new week opens, and then we have the first run higher, and then this run higher creates the opening range gap high, opening range gap equilibrium, and opening range low. So what happens after this is that we have a Judas swing into the opening range gap, and this is significant because it overlaps with a 4-hour imbalance here, and also below the opening range equilibrium. So opening range equilibrium has been mitigated, and also this is below the opening range equilibrium, so this retracement back here reaches from a premium to a discount, which makes it a high probability to reach for higher prices. Also, this fair value gap here is a unicorn fair value gap, and this would make it harder to disrespect. Doesn't mean we can't disrespect it, just means that it's going to be harder to. So the scenarios I was speaking about just a couple of seconds ago was that the scenario where we inverse it and the scenario where we respect it. And both of these scenarios are actually interesting because they both have good reasons to play out the way they would. Let me start off with the easier reason, which is if we inverse it. If we inverse it, this means that we have been respecting... sorry about that. So let's get back to what we were saying. So the first scenario where we respect the unicorn fair value gap and we reach back into... We reach back into the range discount here from this high to this low, so that would be right around the opening range equilibrium. So what happened is that we already got this retracement lower into the 4-hour fair value gap. So if we wanted to respect this, we would have disrespected these ones. So basically what I'm trying to say is that if order flow was truly bullish, if order flow was truly bearish because of this gap here, then the moment that we retrace into it, we would have got this here to close below this, and then inverse it, and then move into the weekly open. But what's actually really interesting that happened here is that we move into the opening range gap, overlapping with a 4-hour fair value gap here. They can see we respect to the tick, and then we trade immediately higher, which puts me more on the side of maybe we can disrespect it, because if we want to respect it, we would have respected it pretty dramatically, because it was a big wick here lower. But what this tells me is that price has more objectives to fulfill. Because if its fulfillment was to respect this and then move lower, it would have inverted this gap. This gap would have not been respected with this level of precision. Okay, so, and also another reason that this would be respected is to fill the opening range gap low. The second reason, which is the only thing putting me off of this analysis, is that the weekly open, this small wick here, does not deem as a viable manipulation, even though it was into the new week opening gap, which is a key level. It does not seem that it is enough manipulation. Let's actually move into the charts for a second, and I want to go on to the 1 minute chart. Actually, let's go on the 15 minute. Let's go back on. Okay, so you see, even on the 15 minute, here's the weekly open. The manipulation into it is not as significant. You can see it's just a couple of wicks, and we don't sweep any major liquidity. We don't induce any type of long-term sellers, long-term buyers. See, the only move lower that we had here just seems like a normal push lower. And also it happening on a Sunday just makes it less reliable. Okay, so yeah, so the second reason why this might be respected is to just have another stab at the weekly open. But with this wick here, it might be contradicting to say that, because this wick here already had the retracement. So if we go on to this price action, the 15 minute, that big wick lower here, it already, it induced sellers, it induced willing sellers here and buyers on this leg higher, and it took some liquidity here. So this leg down here by itself, which is this wick here, could be viable for just the retracement that would have been replaced by the weekly opening. But the thing that I don't like is that we're not going to give the week that big of a wick. So if you want the weekly, you can see the wick of this week is barely any points. Yeah, a 31 point wick. That's not nearly as significant as these other wicks. So you see, like, a proper manipulation, which would be like this, would be how much points is this? Would be like a 340 point manipulation. Let's go with another one here. This is a promising manipulation on just a small wick like this. I don't know if I can trust it. But another thing that supports it is that we also stab into the monthly open. So us stabbing into the weekly open again might not be as significant, because we already are within the monthly open. And then I think I mentioned the reason why this would be inversed. It would just be to reach for equal highs and then balance previous week's range, and that would make it more efficient for price delivery to the anchor high, which is printing a new all-time high. So that's generally it for the outlook and the EOD. And yeah, it is 2:34 a.m. where I'm at, so I'm gonna go get some sleep, and hopefully tomorrow will be a great trading day. Thank you everyone for watching this video.